through TEC community, we organize events, trainings, B2B networking and connections to make sure our member companies are successful personally and professionally. And we're happy to have Paul today to discuss World Entrepreneurs Day, which is this week. And we have a lot of members who are very entrepreneurial, who have grown their business through renting their office space from TEC. So Paul, our CEO, has a very unique perspective because he started the Executive Center 26 years ago in Hong Kong and grew the business from just one location to more than 135 locations. So I think there's a lot for us to learn from Paul Salnikow before we talk to those panelists about their experience growing their business. So thank you, Paul, for joining us today and sharing some of your insights about how you grew our company.
Thank you, Stephen.
Yeah, so we have a lot to discuss, but the first question I think many of our members will be curious about: where did you get the idea to start the Executive Center in the first place?
Yeah, it was, I was working in London with a Japanese property group, and I was sent over as part of a project team to London to bid on a project. It was called Paternoster Square, right next to St. Paul's Cathedral. And this was in the late 80s. And I was a junior member of the team. And our Japanese company, this was their first entry into the UK, London property market. And we were going to go in with a big splash, secure a very important development site. And as a junior member of the team, my first task was to get some temporary office space for us. And the concept of serviced offices, business centers in the late 80s didn't really exist. So I wasn't going out to a Regus or an executive center. I understood that there was no such thing as temporary office space, but I did think we could rent space from landlords directly for a relatively short period of time. And that turned out to be not the case. The shortest lease term that I could identify using agents, I was using CBRE, was 14 years. It was a break lease. So my Japanese bosses were exceptionally unimpressed with my poor performance, told me off, and then they went off and found Japanese agents that were operating in London, and they went through the same exercise and came back with pretty much the same result. And my Japanese company then said, oh, well, you know, London, UK, what a difficult place to do business, you know, and we ended up settling on that 14-year break lease clause option. And having gone through that exercise of trying to find temporary space, ending up with very long-term space, the standard lease in London in the late 80s was a 25-year upwards only ratchet clause lease commitment with a landlord. So I thought, wow, you know, why isn't anybody creating space that is effectively a hotel for companies where you could come in, use the space temporarily? Surely not everybody needs a permanent lease commitment. But I was young, I was working for another business, and I kind of parked the idea. Several years later, I was transferred by the very same company to Hong Kong, and we, once again, were facing the same scenario. We needed to launch our office, we needed temporary space, and it wasn't available in Hong Kong either. And we ended up cohabitating with a local joint venture partner and using space within their space until we leased our own space, fitted it out, reception, meeting rooms, workstations, no server room. It was the early 90s. Spent a lot of money. There was exactly 3 people in our office, the Japanese chap, myself, and the secretary. But we had about 1,200 square feet, and we'd spent several $100,000 creating this office space. And, you know, frankly, it was a waste of money. Again, the idea came back to me, and I ended up leaving that Japanese company in 92. The Japanese recession of the early 90s, which then lasted for over 10 years, was beginning to impact markets. The Japanese group decided to withdraw from Hong Kong. Actually, they withdrew from London as well. they ended up having to face the break lease obligations with those respective landlords, so more money that they had to pay out. I, meanwhile, became an independent consultant doing some property brokerage business, and I pulled together a business plan for what eventually became the Executive Center and shopped it around and found a backer, and in 1994 was able to launch it using the business plan and my sweat equity, a bit of my money, but also financial backing from an investor to launch the business.
Yeah. So I think the follow-up question there is people always ask then, what do you attribute the success of the business? Because maybe there were other people with this idea, or you know, there was this market opportunity. So what made the Executive Center successful?
Well, fundamentally, I think it's very, very impossible to have a genuinely unique idea. I mean, any idea that you're working on, you have to assume that there are multiple people, particularly nowadays with, the internet. There's multiple people probably working on that. So it's, to a degree, it's perseverance. I discovered the idea in the late 80s, and it took me 5 years to actually effectively come to market with it in Hong Kong in 1994. So during that 5-year period, and certainly nowadays, I would expect that multiple other people would step in, and the Executive Center would have remained an idea only because I took too long to move it from the idea phase to the reality phase. But it was a different world back then. In terms of what's made the Executive Center successful is, as an entrepreneur, you see the potential and you work hard on the opportunity, and often it's revenue or product driven. You don't see the hurdles, thank God. Because if you saw the hurdles and if you saw how hard it was going to be at times, you would probably never do it. And I certainly didn't launch the Executive Center in 1994 thinking I would still be running and building the Executive Center in 2020. I mean, that would have been a staggeringly, almost unattractive concept that I would have stuck with the idea for 25 years. But for me, it's the Executive Center, the business and the marketplace has evolved frequently enough that the Executive Center of 2020s bears very little resemblance to what it was initially in 1994.
Yeah, and I think that that formula always being adjusted or having to adapt to the market leads me to another question people will ask, which is, what is the formula for success if you're starting a business? Is there some path we should follow, certain factors that, delineate success from failure? What would you say based on your experiences?
Well, it's a loaded question, and many people say, well, there is no path to success, but there are definitely steps to success. Number one, as an entrepreneur, as an individual, you have to believe in yourself. And you will be, your plan, your business plan, will be evaluated and critiqued by others and by the marketplace repeatedly. And there will be people who will say it's wonderful and not be honest with you. And there'll be other people who will point out the defects. And over time, I've made many, many mistakes. So the idea is how do you bounce back from those mistakes and convert that into experience, and then apply the experience to hopefully not repeat the mistakes. But throughout it all, you have to continue to have the conviction that what you're doing is good and you have the ability to move it forward. The other thing is I'm only an individual. Nowadays, the Executive Center is over 1,000 people working as my teammates. So from the very beginning, I felt that I understood my strengths. For example, the marketplace, sales, the positioning of the product, differentiation. And then I brought in other people to address what I viewed as my weakness. So for example, on the financial side, bring in somebody who's very strong on finance, on cash flow, bring in somebody else who's there and attentive on detail of service delivery. And you eventually build out a team. It is, I suppose, possible to be an entrepreneur of one, but if you're building a business, then a business is a collective of people, and you have to respect and in fact embrace those people very sincerely and make them part of your experience, so that you know, I'm just one member of the Executive Center team, but today, you know, 18th of August, you know, we are delivering across our 32 markets because we're all on the same mission. And I think that that is a very important step as an entrepreneur, is to shift from the I've got an idea, I've got a business plan, to understanding that to deliver it, you're going to have to share that idea, the business plan, and in fact, the ownership of the business with others, to match your strength to their strengths, and have a, you know, the collective is worth more than the individual.
Yeah, I think that's a good point about when you're first starting the business. It's more about belief in yourself and what, you know, what the product is or what the business model is, and then as you grow, it becomes more about the team. So the follow-up question here is, what were the resources that you needed, you know, to grow? Let's say once you had, you know, 2 centers, 5 centers, how did you get to 135, 140 different locations? That's the big question, right? What was important for you to?
Stephen, you always need money, right? I mean, so no matter how big or profitable a business is, the Executive Center has been profitable for a long time. We use the profits we generate, our EBITDA from last year becomes our expansion capital for this year. And we've been following that model for a very long time. Businesses that have been launched in more recently in the last 10, 15 years, post-GFC, the last 12 years, the model has been more frequently about raising multiple rounds of new investment, A round, B round, C round. So less debt. You're not necessarily growing from being a profitable business, but you have a model which is perhaps loss-making, but it's the promise is it will become profitable, and you continue to bring in additional investors at a higher value. Whether you're doing that more modern version or you're using the more traditional version that the Executive Center has, which is reinvestment of profits, money is fundamental. And what I learned along the way was figuring out and successfully generating revenue is already a big ask. But if you're good enough and lucky enough to achieve that, you nonetheless still absolutely need probably somebody else, the CFO side of the business, making sure that they're taking care of the cost. Because somebody who's growing the business, such as myself, is going to be far more willing to spend. Hey, you know, we need to grow in Sydney. We need to have another center in Tokyo. Hey, we've got client demand in Beijing. Let's go pursue all these opportunities because it'll be wonderful when we deliver on all of this client growth. But somebody behind the scenes has got to be making sure that, you know, cash flows coming in, days sales outstanding, bank balances, reserves, so that when bad times occur, like we are living through now, the company is sustainable. This is in the last 25 years, this is our 5th economic downturn. You know, global financial crisis, SARS, dot-com bubble, Asian emerging country crisis in 1997, 98. When these downturns occur, they never come with much warning, and they hit much harder than you think. And you need strong cash management to survive. Even if survival means going out to raise new money or to go to your investors and ask for more money, they're always going to suddenly become very conservative and say, well, show us your bank balances, show us your cost controls, show us how you can reduce costs without damaging the business. So what we learned is to make this part of our day-to-day process during the good times, so that when the bad times hit, for sure, you know, we're staggered by it, but we're not knocked over. I think that's a very, very important lesson during, you know, these ups and downs. So that moving forward, as we move through COVID and this economic downturn in 2021, 22, I want us to be taking advantage of reduced base rentals, but recovering economic viability to then grow. And I'll have the ability to grow because we have cash reserves.
Right. I think when you talked about having those reserves and preparing for that rainy day, certainly now with COVID-19, a lot of companies are thinking about how they adjust now. What's the outlook for business? So since PEC has gone through these different periods of up and down in the market, uh, what would you say companies should do to adjust when times do get tough economically like they are in many markets this year?
So from the executive center's point of view, we're a client-facing business. So again, what I learned from previous downturns is do not change the client-facing experience. So in our centers where we have baristas, or in our centers where we have client lounges, or in all of our centers where we have our client support teams and something as trivial as our Nespresso machines, you know, that all stays and in fact is enhanced. Keep smiling and embracing your members, your clients, because that's the behind the scenes, that's the revenue you have. In other words, hold on to the revenue you have. For sure, you need to go through belt tightening, but not client-facing belt tightening, because then you're just undermining the viability of your business and the reason for why those clients are with you in the first place. Behind the scenes, tighten that which you can, and that's the discretionary. You know, COVID has solved many of those questions for us. No travel, reduce or eliminate F&B discretionary, entertainment expenditure. We have tightened on our marketing expenditure. We put not so much a formal hiring freeze, but we certainly stopped expanding our headcount, except where we're opening new centers and the expansion of headcount was a requirement. I've chosen within our team to say, okay, no cost reductions on salaries or bonuses on HR because we are client-facing, we're a client-facing business, but certainly reducing badly referred to often as the fat or deadwood, or perhaps, as GE would say, the underperformers. If you are carrying headcount which isn't returning a return for you, you have to be pretty swift about tightening that belt. So tighten up your OpEx, tighten up your HR, and then for the executive center, our largest cost element is our landlord leases. But those are contracts, and over the years we've learned that landlords are very unwilling to restructure base rents. But because we have 135 locations and signed up over time, in any given year, we have about 20 to 25% of our portfolios up for a base rent review or renegotiation. So we focused on that 20 to 25% of our base rents, which have a rent review or a rent renewal this year into next year, and we're reducing those costs. So tighten up on the costs, preserve, embrace the client base, and then focus on signing new business. The last piece of it is important because we are a flexible business. Every day, even during the best of times, every month we have clients that are departing as they move on to a new way of office accommodation. So we're very focused on new sales. We've not cut our prices, but we've absolutely adjusted our prices. We're still the premium flexible office operator. We still have the best locations. Frankly, we still charge and achieve, are valued by the market with some of the highest workstation rates in our respective markets, but those workstation rates have reduced. As a business manager, I wish they hadn't, but as a business manager, if we don't adjust our pricing to reflect market conditions, then we will simply sit on the sidelines with less business. So we're adjusting our pricing, we're also adjusting our costs, and we understand that over this next period, our margins will get squeezed, will narrow, but from previous experience, we feel that we had sufficient margins before we entered this crisis, that the margins will narrow, but not anywhere near put us into a loss-making position. And why it's important is we cannot be the vessel for our our clients' business in our 135 locations if we're losing money. Because if we're not paying rent, or like some of our competitors are closing centers, that's an untenable scenario. So our promise to our clients is that TC will always service its rents, will always be open, and will always service our members. And we can do that because we have the margins and we've learned how to run our business so that we are a sustainable long-term delivery of our product.
Yeah, and I think during COVID-19 in different markets, the ability of TEC to open or stay open based on the health conditions, being able to keep serving our members in those markets during very difficult times, that really, showed our care for the members. So thank you, Paul, for sharing some of your insights. I think this is a great start to our webinar and very insightful. So thank you once again.
Thanks.
And I'd like to pass over now to our webinar portion of the event. So we have three great TEC members, and I will introduce them as well as the MC for the panel. So we have Quentin Grolick, who is Country Manager, Conference and Community for TEC Australia. He will be leading this panel discussion, and we have three great members from TEC. First is Gary Yu, who's Associate Director Asia for PRCO Group. So that is a PR marketing agency, and Gary's based in our Hong Kong office, one of our Hong Kong centers. So we also have Greg Betty, who is leading Growth Potential Australia, director there. His business is focused on helping SMEs grow. So that's a great topic related to World Entrepreneurs Day. He's based in a TEC Sydney office. And then our third panelist is Sumit Khanna, who's the city head for FM Global. So he'll be talking about insurance, reinsurance industry in our India market, and also how he's growing his new business there with the Executive Center. So I will pass the virtual microphone now over to Quentin for some discussion on how they are growing their business, and I will make him the focus here of our window so he could help guide that conversation. So welcome, Quentin.
Thank you, Stephen, and thank you, Paul, for sharing your experience and offering your insights to everyone. I think we'll just begin the panel discussion by letting the panelists introduce themselves quite briefly. Gary, Greg, and Sumit, if you can just introduce yourself for a couple of minutes, one after the other, and then we'll start with the questions.
Okay,
Gary, do you want
maybe I'll start first. Hi, everyone. I'm Gary Yu, Associate Director for PLCO Group. We are a global strategic communication agency. We are specialized in travel and tourism, lots of the hospitality client, but also focus on real estate and luxury lifestyle sector. At the moment, we have like office around the world, from London, Paris, Munich, Milan, Moscow, Dubai, and PLCO Asia, where I actually in charge of with Hong Kong and Shanghai office. So I've been in business for many years, more than 25 years. And I just basically with PLCO, I launched PLCO Asia back in 2018. So it's a relatively new agency. So it's kind of a startup company. And previously I had also actually in China, 2008, I actually expand for another agency, is like a startup company, expand to 25 star with Shanghai, Beijing, and Chengdu office, which the business is going really fast at that time. And it's one of the key factor. At the end, we actually, that we have a really investor, a Japanese advertising agency, who actually acquired us. And so since then, now I start PLCO Asia. Hopefully with the Special Entrepreneur Day, I can give some insight about starting a business in Asia, particularly in China and Hong Kong.
Perfect. Thanks a lot, Gary. Greg, do you want to go next?
Yeah. Afternoon to everyone. So my name's Greg. I've been in the small business education and coaching space for about 9 years now. It goes quick. And I'm the owner and founder of Growth Potential, located in TSS Sydney CBD. We're currently working with about 80 companies and growing quite rapidly at the moment. And really the key things we address is if business owners are struggling with either their team, their time, or not making enough money, that's often what we're addressing. And it can be everything from the basics of marketing right the way through to refining a sales process, perhaps even developing the leadership and management within an organization. But yeah, probably the last point I'd make is we're very focused on the smaller end of town. I certainly think that small business generally, and probably a lot of countries, are the ones that are slightly more neglected when it comes to education and consultative support. So that's us, that's what we do. Cheers. Thanks for having me.
Thanks, Greg. Sumit.
Thanks, Quentin. Good morning, everyone. We are typically an insurance company, the commercial industry property insurance company, even though it may not be a startup. It started way back in 1835, and we have close to 2 centuries of the legacy. And we started in India recently, trying to come up with the reinsurance office, and I've been involved with the insurance and reinsurance since a decade. Apart from doing the underwriting to grow profitably, we manage the relationship in South Asia with the clients, with the partners that we work with, and with the brokers. We understand that we cannot have the licenses in all the countries, so we work with our partners. We call them world reach partners, and that's something that we have learned. When you grow your business, you grow to many other countries, especially we have our presence in 110 plus countries. It's not possible to get your licenses in all the countries. How do you develop the strategic partnership with those individuals in those countries, some of the best notch insurance companies, and that is how you expand and grow into those countries. Well, in India, we work with Bureau of Indian Standards because we believe majority of losses are preventable. Being into the business of buying risk as an insurance company, we believe it's good to prevent the risk rather than just pay for the risk. So we work with the Bureau of Indian Standards to improve the country's codes and standards as far as the fire and other perils are concerned. And I personally worked on various capacities in terms of loss prevention, and we represented some of the national committees of Bureau of Indian Standards, trying to help our clients here in India and anywhere in the globe to reduce the losses. And in case they see any losses, we would always be there to make sure that they get back up and running as soon as possible.
All right, thanks a lot, Sumit. And that's it's pretty amazing to see between the three of you the wealth of entrepreneurial experience that you all have, which is ideal for the discussion that we're going to have. I guess we can just start the conversation with a very general question about entrepreneurship that Paul briefly spoke about. But from your own individual experiences, what are the common mistakes or misconceptions that business leaders deal with? Maybe we'll start with you, Greg.
Yeah, sure. Well, I might be a bit biased on this one, but I think one of the common mistakes people make in small business is not working on themselves, actually investing in their knowledge in how to grow a business. Most small business owners haven't necessarily come out of a business degree or some small business education course, and they go out, they're usually very good at what they do. So as an example, a hairdresser, very, very good hairdresser, but might have absolutely no idea how to run a business. So I think if you look at you being the most important bit of resource or capital within the business and continue to work on yourself, would definitely be a mistake to avoid. Another one I hear all the time actually is we need more leads. So the solution to everyone's small business problems, we need more leads, we need more leads. And more often than not, it's not leads that are the problem. And worse than that, it's often one of the more expensive things to do when growing the business. It might be, as Paul was referring to before, really looking at the client interface and saying, how do we do this better so people start to talk about what we do? It might be more often than not looking at your sales process, and rather than blaming the prospects that they're only interested in price, assessing how you're converting. One of my favorite sayings in sales is price is only an issue in the absence of value. And I think, TEC is a great example of that in the market, but really looking at how are we converting? Are we just having a quick coffee and then saying, would you like to buy? Or are you walking them through a very diligent sales process and trying to temperature check them, remove the objections, really demonstrate the value, and then asking for the sale? When we're joking with clients, we often like it to going up to a guy or girl in a bar and on the very first interaction, asking if you can get married or worse. The reality is you've got to date. You've got to walk them through a process before you can convince someone to put a ring on the finger. So those are probably a couple of common mistakes we see in small business. Hopefully that helps.
Yeah, right. Yeah, it does. Sumit, do you have similar experiences, or do you have yours are a bit different?
Well, I think most of the entrepreneurs would have very similar experience, but I would like to share something from the insurance and the reinsurance world. And people believe, either they do not have the risk or they do not perceive the risk, and the risk can be easily transferred. We always like to tell them that there is a one step before. There is always a possibility that you can reduce the risk. Disasters are preventable. The natural calamities that happen because of the floods and the earthquake and the wind, of course, the mother nature is going to show the forces. But the thing is, the damage which can happen from that is actually preventable. So the misconception is, oh, mother nature is going to come, this is going to damage everything, all the properties all around it, and we can't do anything about it. Well, actually, that's a misconception. That's a mistake that people do make. There are real sound engineering principles which they can adopt and use to really prevent the losses from happening. And when we came down to the TEC's building for the first time, apart from seeing the aesthetics and the interiors, we were inclined to go down to the pump house in the building where the TEC was located and look at the construction quality and the escape routes and all that. And TEC was like, why are you actually looking at this? And we said, these are some of the common risks. There is a damage which can happen from the fire, but something that we would love to see it where we occupy this space, as well as even all the other people who are into the multi-tenanted building. So that's a common misconception that we see that people actually do make. Sometimes we believe another one is like all the entrepreneurs are natural born leaders. Well, I think Paul was talking initially, and he mentioned that there are few qualities that you have as an individual. When you start your company, you would be doing sales, you would be doing marketing, you would be doing everything. But a lot of things, believe me, from organizing to operating to scaling the business, there are lots and lots of people who can actually do a better job than us. And that's how I think there is a great story that I actually learned from Paul. The whole 1,000-member team that you have in TEC is the example. When you can grow the team, you can't do everything on your own. So even though they're born entrepreneurs, but they may not be like natural leaders, hire the leaders, which is actually better than you. I think there is always a way that you can hire the new talent. And many times we see entrepreneurs saying we need more resources. And again, I think I take a clue from what Paul said. Do we need more resources, or do we need optimum and efficient resources? So tightening the belt is very much required at the time. And of course, recession is a great teacher, which teaches us what basically needs to be tightened. So those are some of the things that I thought I would like to add from my side.
Yeah, perfect. Yeah, that's great. Gary, what are the common mistakes that you saw in your entrepreneurship journey?
Yes, well, I am in PR and communications, so I see a lot of people when they start up the business, whether or not it's B2B or B2C. There are a lot of Western expat people coming to Asia. They're thinking, okay, I've done it before in other countries. They just copy the strategy into the market. A lot of entrepreneurs, maybe they say, okay, I've been in China or Asia a long time. I see other people doing this already, and which they're really successful. So they just copy what they've been doing. Yeah, sometimes when in this like the business is good, everyone is happy, they probably will be successful. But in a difficult time like this, you cannot actually ignore that a lot of elements is from outside. There are a lot of outside elements could affect your business. So I think ultimately, really, you have to understand the market, whether or not it's in China, Asia, or any other parts of the world. Do a lot of research, understand the market, particularly understand your target audience. If it's like your target audience is focused on certain area, do more research, find out what's happening. I understand entrepreneur, a lot of people in Asia, they might not know people or difficult, just they can do online research. That is a basic research. But I think in particular this Asia or China, there's a lot of people who have been doing it. They are quite willing to help you. So when you do research, you also ask around within the industry, what other experience people have. Like John, this webinar, you can actually understand what other people are doing. But importantly, to understand what you are actually provide, whether or not it's a service or a product. How does your advantage that compared to other company, very similar competitor, but what is the differentiation of your company? How does it apply to attract your target audience? I think a lot of people, common mistake, as I mentioned before, it's just like doing exactly the same thing, copy someone or copy what we've done before, but without understanding of what the target is. I think this is one of the key things people should do. Nowadays with social media, it's quite important. A lot of things you can do social listening and find out what's going on in the market. I think that is particularly with young entrepreneur, I'm pretty sure they're well versed with social media. I think that is a key starting point to look at.
Yeah, perfect. No, thanks a lot, Gary. And, based on what you three have said and what Paul has said, I think every entrepreneur that have, been on the journey know that mistakes are unavoidable. Like, you cannot not make mistakes, and it's more about how you get back from that and what you learn from it. And it's good to hear that you've all in different industries obviously faced different scenarios, and it's quite insightful to hear. We've touched base on the resources to scale a business with Paul a bit earlier, and we know that resources for early stages businesses can be quite scarce. So I think it would be very interesting to have your own personal insights on how entrepreneurs can overcome resources scarcity when they're trying to grow and scale their businesses. Sumit, do you want to start on this one?
Sure, Quentin. Well, I think before starting to answer this question again, I would like to go back to a small ship story. I mean, it basically is when somebody is trying to create a ship. I mean, if the person who's trying to create the ship is only concerned about how to gather the wood, how to divide the work, and how to give orders, pretty much he's going to create the ship. But idea is, I think, how do you transfer that vision and the passion of creating the ship and explain the entire voyage to the people who are involved in that? That is something that will, even though you have this scarce resource, you will be able to work with those people who are actually within your team. So idea is, how do you transfer that passion and the vision to the people when you are starting the entrepreneurship journey? One thing that I can tell about, the organization that I work for, 185 years back, the person who started this journey was a mill owner. He would have never thought that he is going to start the insurance company. He started the insurance company with the belief that majority of loss is preventable. If you ask today in 2020 any of the employees that who works for this company, everybody has got same belief, and they live by that. Majority of loss is preventable. So he was able to translate the vision and the mission of the company, that it is even alive today. So I think it's very, very important that even if you have scarce resources, but can people take it forward? The entrepreneurs may not exist. I mean, maybe 30, 40, we all have very limited life, but do we see that organizations are being created for long term, or are they being created for a short term? So if you want to create a legacy, there is something that needs to be transferred. So that's first point that I thought I would like to share. Now, when it really comes down to the resources, we always say there is a saying that profit is a theory and cash is a fact. So when Paul was talking about the cash flows, it's very important to have the cash management sorted out. And COVID times have really taught us what are the good resources, what are the not so good resources, and what is the value and the importance of those resources. And we have to really find out what is must do in the current times and what is good to do. And those are the must do which has to go on. Good to do can be parked and some of the expenses can be cut down, but not only during this time, but some of the strategies which have worked, how do you grow organically? And how do you make sure that you have less and less debt from the market? Can you use your own cash flows? I much like what Paul and Greg and Gary have shared, right? You initially build the capital, and how do you use your internal capital, internal reserves to basically expand? And this is what, again, I mean, we have reached close to $16 billion as a cash reserve. We have absolutely zero debt. Did it happen overnight? No, of course it did not happen overnight. I think we slowly have moved forward and seen how do we build the capital reserves. Again, how do we leverage the social media? Today, I mean, marketing is actually much easier than what it used to be. You can reach millions and millions of people in one shot and use the social media platform. And then do you need, again, presence in all the countries, in all the counties or all the states that you work with, or can a partnership do? So when you have a very limited resource, you have to find out what works around you, what's the best way to do the partnership so that you can leverage some of the capabilities of the other companies and other organizations also. That's my initial thoughts. And Quentin, I would be happy to take the questions later, but yeah, that's my initial thoughts on scope.
That's perfect. Thanks a lot, Sumit. Gary, I'm pretty sure when it comes to overcoming resource scarcity, when you launched the company in Asia, you've probably faced some of those situations. So how did you overcome the scarcity of resources, and share your experience with us on that if you can.
Sure. I think there's many hurdles to overcome when you're starting a business. Resources is definitely one of the major challenges. I always, the couple of times I do send our company, always the resources when it's like only on your own or only a couple of staff. But I think I mentioned before, with limited resources that you have, I think at the moment, the power of social media is really essential to your business. Particularly for entrepreneur to build a personal brand is quite important on your own or your company. There are so many social media platforms, particularly LinkedIn at the moment is a great platform for entrepreneur to network and build a brand. For my own experience, like back in 2008, when I started a small agency in China, everyone is talking about guanxi. Guanxi is essentially a relationship, basically. So this is essential to do business in Asia. Whether you know people, you know the client, you have to build a strong relationship with the client, your partner, and stakeholder to build a long-term relationship. Well, I'm quite lucky in a way that I've been in Asia for a long time, in China a long time. So I already built a very strong, good network of people, good relationship with people, with media, with business contact, so I can rely on those relationships to actually start a company. When I launched PLCO for Hong Kong and Shanghai, I really leveraged also, particularly the PLCO group back in Europe, all the different offices around the world to help me to build a stronger network to actually build the business. But for for entrepreneurs, we are new to the market in Asia, when they're maybe American coming to Asia or start business in China, they might not know people. And so it's important actually to actually go around offline and offline to build your network. Nowadays, there are many groups like on LinkedIn, on Facebook, whether or not it's B2B, LinkedIn is definitely the social media platform. There are Facebook groups that you can join, basically to talk about particular industry insight, and to go into the group, join the group to see what other people are saying, and then build a network. There are people willing to help you also. I mean, in China, obviously WeChat is a quite important platform. WeChat at the moment, besides you can set up your own account, but also there are many business groups within the WeChat group. Like I think TEC have your own business group within TEC membership. And so through that network, you can ask those questions for help. Yeah, information you can actually get from them. So those are important networking platform, whether it's offline and online. networking is essential for doing business, particularly for my industry and most of the clients that we do. And so, like for me, my experience within the hospitality travel industry, I go to event a lot, networking, meeting people, but actually I also actually talk to people that I know within the industry to make introduction for me. And so I think maybe some people shy might be difficult, but I think when you are entrepreneur, you have the drive. And I think Paul mentioned before, you have to believe in yourself, believe in your business. So when you go out networking, you have to actually sell yourself. And I think that's quite important. Social media and networking.
Yeah, perfect. No, thanks a lot, Gary. Greg, how did the scarcity of resources affected you at some point in your entrepreneurship journey? And maybe how do you see it affecting some of the clients that you're currently helping?
Yeah, and just having a bit of time to think about the question from what the other panelists were saying. I'll leave the marketing because I agree the social is a good way to get a bit of leverage. But if you look at for all our little small businesses and startups we're working with, arguably the two key resources, boiling it down, is time and money. And in that, you go, okay, well, how do we get more money to begin with? And I think where a lot of people come unstuck is not focusing on the lead generation and sales early on. Many a great systematized business, many a great amazing website, brochure, a lot of investment can go into a business, but if there's no revenue coming in, you'll come unstuck very early. So I think it's worth really focusing on getting lead gen going, getting sales going. Even if your product or service is not perfect immediately, get those things going and get the money coming in. Then the second temptation is to spend it when it comes in. I'm investing in my business. So make sure that you very early on build a good operational cash flow and a buffer. So because you just don't know what could come along. We last year were teaching a conference on recession and looking for black swan events. And then 3-4 months later, COVID came along. But you just don't know what could happen in business. So I think really looking after the cash once you've got it. From a time perspective, usually a small business owner, when they start, it's just themselves. So I think early on, looking to get a good, if you guys are familiar, the yin and yang, I think hiring someone identical to yourself can be a lot of fun, but it might not be what the business needs. So we often talk about finding a yin to your yang. If you're highly detailed, perhaps you need to find a couple of people that are a bit more client facing and people. Or perhaps the other way around, if you're naturally a people person, hiring heaps and heaps of people is a recipe for making sure that none of the details happening in the background of your business. So I think it's worth being very selective in those early first few years in growth, is to hire the right people that do balance out the business well. So you've got people to delegate to, and you can start to gain some of that time back. And if you've got a good operational buffer and a good amount of time, then the magic can start to happen as you scale. So that'd be my view on that question. Yeah.
Yeah, that's a pretty good advice, I would say. Like you said, that you need to work with people that have different skills than yours, so that you can cover the whole aspect of the business. Now I think it's time for the main question of our panel, of our webinar, which is how to take business to the next level. And now even more than ever, I think, when we're all facing challenging and uncertain times at the moment, and I think every businesses have to adapt their strategies to keep growing. So what would you say would need to change in a growth strategy from a I would say a normal environment versus a economic crisis or recession environment, so that you ensure that your business gets out of that reception strong, or even stronger than when it got in? Gary, can we start with you on that?
Sure, no problem. I think I mentioned before, when the business is good, when the whole industry, everything is good. So basically stick to what you're good at, and then sell what you're good at. and you probably be good, really good business. But in terms of during this difficult time, like COVID problem everywhere, it's become a global pandemic, is actually a lot of industry are suffering. So I think in this time, or even just successful or good time, you have to be agile and adaptable. In China and Asia, basically the market changing so fast, like a lot of different social media keep popping out every year, new market, new everything. So as a company, I think to adapt and change and respond quickly are quite important. A lot of people at the moment during COVID transform themselves to become more digital. So digitalization is become a huge part for every single business. Okay, so but you have to ask yourself, where is your business suited for digitalization? Whether or not you can adapt your business to this particular environment. Of course, some product you have to sell physically, but then what happened? You cannot sell digital. So how you can actually adapt to the situation? But I think during boom time, stick to what you do best. Definitely, you will do well. But difficult time, adapt and diversify your business. Okay, like with PLCO, I mentioned we are specialized in travel and hospitality. So now with COVID, we have there's travel restriction. No one can travel. So hotel are suffering. So also become like in terms of PR and communication for those particular clients are also slowing down. So we are actually have less and less budget for our PR and communication. So then what happened? We have to move fast and adapt. So we are focused on more on real estate. Basically, a lot of overseas property client wants to target Asia, target Hong Kong and China, finding overseas buy. So we actually targeting those clients more. And also recently, we actually working for a client. Coverban is a high-end wine accessory, so support them on media relation and even influencer engagement campaign. So we actually moving a little bit more and doing a lot more e-commerce business client. So it's about adaptability, be really response well. If your own industry might not be well, changing, targeting different industry. Of course, that's again, I mentioned before, have to be fit whether or not your business could be able to adapt to it. But again, I think there's a lot of experienced people have been doing it. Again, see what other people and see what in the industry. So you probably learn from other people. It's the best.
Perfect. No, thanks a lot, Gary. Samit, what would you say the difference is between a growth strategy in a normal times versus nowadays time in a sort of a recession?
So Quentin, I think if we look at the experiences, I think this is not the first time that we are seeing recession. You know, in the past 4 decades, this is the 5th time it is happening. Do we have the learnings from all those past recessions? Yes, of course we do have. Did all of us learn from those recessions? I think no. Did all the businesses are suffering because of these recessions? Actually, the answer is no. Some of them are able to actually change their business model. And as Gary said, I think you will have to actually adapt to the circumstances. And for customers to, for understanding what's the need of the customer, you will have to have a stethoscope by which you can actually hear the beats of the customer. What is customer asking? If the customer is not able to come near to you, can you go close to the customers? Because when the times are tough, sometimes that's the time when you can build your share. You know, find out the right media. If it is not like a TV or a radio or outdoor, go online, find out YouTube or LinkedIn or Facebook, but go closer to your customer. You don't have to actually, be, within whatever you were doing. You will have to change the business model. From insurance perspective, businesses are at risk and the business interruption values are going down. Something which a lot of companies did not anticipate. And now they are thinking, I can give you an example of like Wimbledon. Wimbledon never thought that, the pandemic is going to hit, but they started investing, like paying a premium of 2 million in 2007. And for like 13 years, they have for close to 17 years, they had actually paid the premium of 2 million every year. But when the pandemic hit, they were able to recover $141 million of the recovery. So think what is going to hit, learn from the past mistakes, learn from somebody else's mistake, and then move on.
Okay, Quentin, panelists, I want to thank all of you for the great insights. We want to close with a little bit of time for Q&A. So if you have a question for our panelists, You can type your question in the chat window. Just click the chat button, type your question. We'll take 2 questions and then we need to finish. So the first question from one of our members is it true that entrepreneurs will pivot a couple of times in the first 2 years of their business? So is this true that you need to be very flexible, changing? I see Paul reacting to that. Paul, if you want to answer, or if one of the panelists wants to answer, open this up to everybody.
I don't want to interfere with the panel, but I'm laughing because you never stop pivoting. The business that the executives, we're a premium, our distinguishing features is we are differentiated, we're premium, very well located, nice fit outs, good, hopefully very good service. But what that actually means in the marketplace evolves. And we've heard about social media, we've heard about marketing, we've heard about client engagement, cash flow management. I've always said to my teams, every day wake up thinking you can do better. Look for ways to improve. The second you start patting yourself on the back, you better be heading for an exit because your business is about to head downwards.
Thank you, Paul. Any of the panelists want to address that question?
I think Paul's answer was a good one.
Good. We have time for just one more because time is very tight. So another question is, a lot of young people, especially here in China, they want to go work for a bigger company, maybe a famous brand. So if you're running your own business or you're a startup, how can you attract and retain talent? Maybe you don't have the ability to pay as much, or you're not as fancy, as famous as the big companies. How can you compete? Greg, I think maybe you'll have some insights there.
Yeah, it's another very common thing we're asked in our work day to day. And I think a good way to view it is looking at the overall employee value proposition. So what is it that we can offer that other places of employment can't? So it might be, do you have better culture? Is it a more attractive environment? What brightness of future do they have if they are going to come working with you? Not every employee is going to stay with your business forever, or would be very, very rare. So just looking at what that path may look like for the majority of people coming through. It also, a lot of people obsess over money and saying money is the reason that people come to work. But if you have a look at all the science, all the research, money is actually a fair way down the list, sort of 8th or 9th. Often it's the recognition and that brightness of future that really drives good talent to come to good organizations. There's, without boring you to death, there's many, many more elements, but I think if just looking at the overall offer to the employee is probably a good place to start.
Yeah. Gary, for China, since you're in, you go between Hong Kong and Shanghai TEC Center. So how do you get those young people in mainland China, let's say, to join a smaller business? Do you use social media, like Greg said, to make your brand more culturally, open, international, or diverse and inclusive? Or, what's the message to attract those people?
Yeah, I totally agree with that. Interestingly, I think my experience actually, yes, in China, lots of young people want to work for a big company, maybe more money. But in fact, a lot of my experience, they really actually sometimes don't care about big company or even money. Some people a long time ago, when people give them like 1,000 RMB, they would jump ship. Yes, it happened, of course. But is it those type of employee really that people that you want to keep for long term? In terms of long-term strategy for a company, my experience actually, as Greg said, a culture is important, but also building a brand. When I started the previous agency, even PLCO, actually small company, probably no one heard about these 2 companies. And so how do I attract people? It's actually building a brand. We are, again, specialized in hospitality, travel, tourism. This is certain industry that young people aspire to. They want to work in this industry. People say work in a hotel is a hardship, definitely, like from like probably 6 a.m. until the midnight. But we as an agency, especially in travel tourism, they might want to work in this industry, but in a different sector. So we rely on the branding. Culture is important. We actually have a really young and vibrant background. And so that attract a lot of young people to join. My experience actually more and more young people in China, they actually move away from big company. They want to work to join a young entrepreneurs company because they want to start something together with you. So if you have good vision, a good branding, I think that would definitely attract people to join you.
Thank you.
Thanks a lot, Gary. That's great. There's just one more question that came through that I found quite interesting since we're talking about entrepreneurship is everyone is thinking that time like these are also bringing opportunities. So the question is, would it be a good idea to start something new right now? What do you guys think?
Well, for me, I think it's in terms of how we are looking for things, we look at SWOT analysis. When there is some crisis, there's always opportunity. I think definitely if you have found a niche in this particular market, go for it. I think that might actually become a huge business because of this particular situation.
Yeah. Greg,
I would tend to agree. An old mentor of mine used to tell me, where there's mystery, there is margin. There is going to be opportunities everywhere. I've got clients that are looking to acquire a lot of their competitors as they start to weaken. I think, even if the market is to go down 30, 40%, if you're planning to grow your business 200-300% year on year in those first few years, a 30% decline in market starts to become irrelevant fairly quickly. And I think everyone, and probably a lot of people on the call, can attest good businesses grow in tough times and good times. It's the good times that hold up the weak ones. So if it's a good idea and you execute it well, absolutely, let it rip.
Perfect.
Great.
That's perfect. But thank you very much. I think our time is up. It's already been an hour. Time flew pretty fast. I mean, there's personally a lot of questions that I'd like to ask you, but I might just email them to you later on. So thanks a lot, everyone, to be part of this webinar. Thanks, Paul, for joining and sharing your experiences again. And we really hope to make this World Entrepreneur Day webinar or physical events in the future sort of a yearly thing for TEC, because we know that there is a lot of entrepreneurs within our member base, and they can all learn from each other as they go. So thank you very much again. Have a great afternoon, everyone. Stay safe, and hopefully I will talk to you guys soon.
Yes, and also if any of our members would like to host an event or a webinar together through TEC Community, we are here to promote your brand, your product, your service, just like our 3 great panelists today. So please send me an email. I believe you have the email invitation that I sent all of you. Let me know your proposal, and we're happy to work with you. If you're not yet a member of the Executive Center, but you would like to partner with us, or especially if you'd like to have a space to work, you could also contact us. We have a new product called Membership and Partnership. So this is a great chance, again, to promote your business and to help sell or promote that product to our network of 27,000 members globally. If you're a member, we will work with you free of charge to help organize that event together. So we're here to promote the success of our member companies and of our community. So once again, thank you, Quentin, Greg, Kana, and of course, Gary and our CEO, Paul, for joining and sharing such great insights. And stay healthy and safe during this time of some uncertainty. And next year, hopefully, just like Quentin said, we'll have face-to-face as well as webinar version of our 2nd annual World Entrepreneurs Day webinar. So thank you again on behalf of TEC, and hope to see you at a future event very soon. Thank you, everybody.
Bye, everyone.
Thank you.
Thank you, everyone. Bye-bye.